What's happening, everybody? What's up to the exam breakdown? Today is Wednesday. It is March 12th. Man, time is flying. 2025. And today what we're doing is on Wednesdays, we typically work with our mortgage loan originator community, and we are trying to help you learn what you need to learn to get through that NMLS mortgage loan origination examination for y'all looking to join various organizations that are state licensed. And it's an exam that I have a lot of experience teaching pre-licensing content to for years and writing tons of material that's in that particular space. So what I'm able to do is look at some content and try to figure out what, in my opinion, the probabilities are that you're going to see something like this on your examination and maybe how they might bring it. I don't have a copy of your exam. I'm not coaching you to the test. I just have a good targeting system. I have on our YouTube channel, and between that and like live performances and live engagements over the years, we're talking like 25 years or so, maybe a little bit more of coaching folks. And I've trained thousands and thousands of folks. And again, what I've learned over the length of time and the tens of thousands of people and the thousands of people that have passed examinations is, hey, I've recognized patterns and I understand how this stuff kind of works. And I'm happy to be a subject matter, I'm not going to say expert, I'm fairly, modest, but I know a thing or two about what I'm teaching you. I've practiced what I've preached. I've been successful as an investor in real estate. I understand finance at a very, very high level. I'm able to communicate this stuff, and I'm a subject matter expert in terms of writing content for this discipline, and I've been involved in it for 3 frickin' decades, a long time. So my targeting system is pretty good. I don't have a copy of my test. Now, on the outset, I want to point this out to all of my students. Thank you, by the way. Hope you're doing well. But I cannot guarantee that you're going to pass. I cannot guarantee that, and I will never guarantee that. As a matter of fact, I've never guaranteed that my entire career as an educator. For people to do that, I've always found that a little bit clunky, quite honestly, because how can they guarantee that you're going to pass? How do they know you? I don't know you. I don't know what you know. I don't know what impressions you have in your life. I don't know what you've learned or what you can't learn or what your hangups are or what you don't have hangups for. So, again, I'm not trying to bash on anybody, but I just want to make it clear that my goal isn't to guarantee anything outside of the fact that I guarantee I know what I'm talking about, and I guarantee that I'm pretty good at what I do. When you take that combination in, and it's like sort of the essence of what it is, and my willingness and my absolute heart and passion to want to make sure that you pass, nothing pleases us more than making sure that that happens, then I think the results come out and they're pretty evident. If you look at the comments, which are wonderful and we appreciate them all over the YouTube channel, people passing, I just don't want to lead people astray. People are passing, and we are so excited about that. And so the work that we're doing is effective and working. However, you have to put in the work. You have to be dedicated. You have to be committed. And whatever might be holding you back or holding you up, make sure you mention that in the comments. It could be that you're really a really bad test taker, really nervous. Something from your past has created this, this stigma. Every time that something happens, you don't perform well. And again, that's head trash. And there's ways to start working on those things to help calm your mind to be able to get you through the examination. But I just wanted that on the outset. I want to make sure that this relationship that we're building is honest and pure. Hope you're all doing well. And with that being said, today's exam breakdown, we're going to hit a few questions, and then we're going to go through some of the answers. We're going to talk about a couple of these concepts. I'm going to give you some really simple ideas and try to point out some things that I think are going to be on this examination. Now, the examination has an outline, and that's something very handy to always have. You can find that at the NMLS website. If you just Google NMLS, you'll find the Conference of State Bank Supervisors site, the registry, and then the NMLS site. And then you go there, you look at education, you'll find testing, and then you will find the outlines. Always keep them because they're always updating and changing things with this particular examination as legislation and things are changing. And as you know, things are changing constantly as to what's going on, especially recently. We're seeing a lot of different things things happening, especially when you're looking at things like the Consumer Financial Protection Bureau, et cetera, et cetera. And those things will be addressed. If you go to the NMLS site, they will have on a board, they'll update various things, and they're going to say, this is going to be removed from the exam, this might be left on the exam, et cetera. So just go there for the latest and greatest bits of information on what's on there, and we're going to continue teaching, because the stuff that I'm teaching you is guaranteed high probability no matter where we are, depending on what's changing in the environment around us. A mortgage will always be defined as a mortgage. Okay, I'm just looking over my shoulder. I want to make sure everything is good to go. It looks like we are, streaming and everything else. So let's jump into this. I want to go through, and I want to kind of go about, I just have to switch something on real quick. While that's booting up. Is anybody taking their examinations this week, coming up soon? Our subscribers have been telling us, and people leaving comments are it's been really awesome. We're seeing so many folks passing. It's so awesome to watch. It's one of those things where I'm impressed. And then just another thing, while I'm just booting up a system really quickly so I can record and see something. But while that's happening, I just wanted to share with you, so I was talking to my son this morning. He was studying for a spelling examination. He's 11, and he's getting pretty good at spelling. I'm very proud of him. He's putting in the work, and he works very, very hard. He tries really hard. He gets good grades, but he has to earn those grades. And I was thinking about, my students. I was thinking about that while we were kind of working, I was working with my son. And he mentioned, he's like, Dad, my friend, blah, blah, he doesn't have to put in any work. I wish I was more like him. I'm like, well, what do you mean? He's like, he's just so smart, and he never does work. He never does his homework. He can do it really fast. And in spelling tests, he doesn't even study. He just can spell great. I'm like, well, that sounds great for that person. But let me just kind of think. I thought about it for a second. Let me explain something to you. If everything came easy to you, if everything came easy and you didn't have to work for anything, if everything were easy, what happens when something hard comes along? Because it's gonna. Something in life is going to come up, and it's going to smack you in the face. It's like Mike Tyson said, everybody has a plan until you get punched in the face. So the reality is that something terrible is going to happen to all of us multiple times. And if you don't know how to work hard, you're never going to be able to outwork that problem. If everything comes easy, like in the example of my son's buddy, that's wonderful. But I guarantee everything in this life won't be easy, just like passing a spelling exam. So you have to put in the work. And he was like, yeah, you're right. And I'm like, wow, that was actually good parenting. You have to put in the work. I would much rather work twice as hard as anybody else in the room and get the results that they're getting, but through hard work, because I'm experiencing the problems minute by minute, the failures, minute by minute, the stresses and the struggles, minute by minute, which is going to make me more resilient when things come at me. And that's a little bit of food for you to chew on. Let's get into it. My recorder's up, so I can now see you, by the way. All right, let's do this. All right, first question. Which of the following does a lender not have to consider when determining a borrower's ability to repay? Letter A, monthly debt-to-income ratio. Letter B, employment status. Letter C, property's future value. Letter D, credit history. All right, so this is a question. I'm just going to mark some stuff up here. The way I want to go about this today is I kind of want to talk about these questions and make sure. So this asking was, what is something that the lender does not, which of the following does a lender not have to consider? Okay. Now, just look at the grammar here. Which of the following does a lender not have to consider? Another way to say this is, which of the following does not have to be considered when determining a borrower's ability to repay? So sometimes when we are looking at questions, grammatically, the phraseology around things might be weird, and you really have to slow it down, and you can't mark up the test. Obviously, it's going to be on a computer, but what you can do is slow your mind down to kind of read through it and make sure you understand. Which of the following does a lender not have to consider when determining a borrower's ability to repay? And it's saying monthly debt to income ratio. Now think of this in another way. Well, if you're a lender, what should you be considering? Should you consider monthly debt to income ratio? I would say yes. Now, I don't know what the answers are, right? But it's asking me what's something that a lender does not have to consider. That's what I've established here. I do need to consider monthly debt to income ratio. So I'm going to say, okay, probably not that one. Employment status. Yes, if I'm a lender, I want to make sure you have the ability and willingness and capacity to pay back my loan. So I want to make sure that you have employment status or some other means, would it be asset dissipation or whatever, to pay me back. All right, good. So I think employment status is not the correct answer because we're looking for something that a lender does not have to consider. What about the property's future value? Now, do I have to consider that? I'm going to tell you that I'm considering that this is probably going to be the answer I need to validate, but I'm going to put a little question mark by this answer here, and I'm going to say, well, wait, the property's future value, why is that relevant? The appraisal value is an opinion of value in a stitch in time. Based off of that, the lender makes a decision. Now, the lender can consider looking at, appreciation values and such, but the reality is you're only looking at it at that moment in time. Can values go up? Yes. Can values go down? Yes. There could be declining values. And we don't know when that could happen. We can't look into the future in that regard. So I'm going to say that the lender does not have to consider the future property value. And then credit history. Well, that's pretty straightforward. That's a big old yes. So look at it like this. I'm guessing that the letter C is the answer, okay? And I'm guessing that based off of this analysis, and we are putting all of this in something called the ability to repay. The ATR rule is the ability to repay. Now, this is guaranteed if I were putting money on something that you're probably going to see this on the exam. They want you to know that when you're looking at a lender, the lender needs to be able to determine that the borrower has that. Now, let's take a look at this next slide, and then we'll look at the answer. The ability to repay rule established under the Dodd-Frank Act requires lenders to assess whether a borrower can reasonably repay their loan. Lenders must evaluate a bunch of factors. 8 can sometimes stress people out, but I would, if you can, memorize them. If not, I would just go, hey, there's a bunch of factors, including things like income and assets to verify stable income. Employment status, monthly debt to income ratio, credit history. Well, the answers, if we go back to that question, monthly income to debt ratio was on that list, employment status was on that list, and credit history was on that list. Okay, so now I'm leaning towards C as my answer. Let's finish up the ability to repay. Loan terms, interest rate, balloon payments, adjustable rate features. This rule ensures that borrowers are not given loans that they cannot afford, reducing risk of default. So if you don't follow the ability to repay rule, and with this hand in hand is the qualified mortgage rule, QM loans. If you are taking your classes, y'all know what I'm talking about. I think I did a video on that, by the way, so just check our channel. So if that's the case, then these are things that go hand in hand, the qualified mortgage rule and the ability to repay rule. And the answer is letter C. So I hope you looked at the way I'm thinking about this. Now, I'm thinking about these test questions just like that. I'm doing them much faster because I know this stuff pretty good. So I'm able to look at these questions and go, okay, well, what's the answer? And I'm able to analyze the answers. So I hope that was helpful, that meditation that I just presented in front of you. Now, the better you get at this, the faster you get at this. The orthodox way of doing this is you read the question, then you read the answers, then you try to figure out which answer is the correct answer. And in this scenario, I'm looking at it going, well, all right, let me analyze the question. Let me see what the trick is. Well, the trick wasn't this traditional trick. The trick was just simple this negative that was placed into the sentencing, the phrase, a little bit later. Which of the following does a lender, that's a positive statement, not have to consider? That's the negative statement. So again, this is where people can get wrong answers when they're just reading this quickly and they're nervous. And hopefully slowing it down would help, some of the students that are watching this. All right, the next one. Which of the following statements is true about the loan estimate and the closing disclosure? Remember, we call these the LE and the CD. If you're in the course, you know what I'm talking about. Letter A, the loan estimate must be provided within 3 business days of application. Letter B, the closing disclosure is given to the borrower on the same day as closing. Letter C, the loan estimate includes final binding loan terms. Letter D, the closing disclosure is optional for refinance transactions. Okay, so looking at this test question, I'm trying to figure out, let me just pop over here. I'm trying to figure out, I'm just going to move this a little bit smaller. what the heck the deal is. And so I'm reading through these answers. I would even ignore the question and I would just look at the answers. So the closing disclosure is optional for refinance transactions. That's not correct. So I'm going to write IC for incorrect. It's an incorrect statement, right? I can even write ICS. Incorrect statement. Loan estimate includes, letter C, final binding loan terms. That is also an incorrect statement. That's not true. It's not the final binding terms. The final terms are delineated or explained in the closing disclosure. And even yet still, y'all, the closing disclosure isn't the final set rules. If it's a refinance for your primary residence, you have 3 full days right of rescission to cancel out of that transaction as well, which is on your exam. You want to know that. And if you don't properly give the notice to cancel in the right of rescission, well, then we can extend the rescission to 36 months. Something else I would want to learn for your exam, by the way. The closing disclosure, letter B here, is given to the borrower on the same day as closing. That's not true. The same day. That's actually 3 days prior to the closing or settlement, right? So all 3, B, C, and D here, are incomplete or incorrect statements. So then let's read A to validate. The loan estimate must be provided within 3 business days of application. So all I'm going to say, I'm not saying this is the answer at this point. I'm just telling you that this is correct. That's what you learn in your books. Every book across the United States, unless you're taking this course with an absolute hack, which is possible, not trying to bust on some of the people, but I know what some of the quality is out there. I'm just going to kind of throw a stone at them because I've seen a lot of these course folks. Now, on the mortgage side of it, the course providers are vetted fairly consistently. So I would say that in this particular genre you do. In the real estate, maybe not so much so. All right. The loan estimate, this is correct. Now let's read the question. Which of the following statements is true about the loan estimate and the closing disclosure? What is true? And I'm going to say that the answer is A. I'm going to pick that. Let's go through this slide. What is the loan estimate? Well, the loan estimate provides borrowers with an initial breakdown. The initial breakdown, all right, remember in that question, it was the final breakdown of loan costs and must be given within 3 business days of loan application. That's a correct statement. It outlines estimated interest rates, monthly payments, and closing costs, not final numbers like that question had mentioned. Now, the closing disclosure is a final document that must be delivered at least 3 business days before the closing. The other one of those answers was on the day of closing, right? So that's incorrect. Allowing borrowers time to renew the final loan terms and compare them with the LE. So with that bit of knowledge, now we can go to the answer. And the answer is letter A. Is the loan estimate must be provided within 3 business days of application. Letters B, C, and D were incorrect. And so, again, hopefully doing this exercise in this fashion is giving you a little bit of pause to see how I'm approaching these questions. And, there's a different way that you could be approaching these questions, and they're going to help you significantly. Number 3. Here I am. A loan is considered high cost under the Home Ownership and Equity Protection Act, or HOEPA, if letter A, the APR exceeds the APOR by more than 1%. Letter B, the lender charges more than 6 points in fees on the loan. Letter C, the loan amount exceeds the jumbo loan threshold. Letter D, points and fees exceed 5% of the loan amount. So they're asking us a little bit about the Homeownership and Equity Protection Act, or HOEPA. HOEPA is also known as Section 32. Section 32 loans. All of this, HOEPA, lives inside of the belly of the Truth in Lending Act. So this is kind of interesting. Think of it like this. In the belly of this massive consumer protection law known as Truth in Lending, the Regulation Z as implemented by, inside of Reg Z is another whole law written called HOEPA. And that's in this, that if you go down to Section 32, go to the 32nd section of that law, and you'll find reference to HOEPA. HOEPA stands for the Home Ownership and Equity Protection Act. This bit of legislation was created to deal specifically with things like predatory lending, high-cost loans. So there's a couple of different categories of loans. There's prime loans, given to the borrowers that have the most, credit qualifications. There's higher cost loans, and a jumbo mortgage exceeding the conforming loan limits might fall into this category because of simply due to the loan size. You might have a high credit borrower with high income, but because of the loan size, it could be a high cost loan. And then those are Section 35 loans, by the way. And then you have Section 32 loans, which are high cost loans, where the cost exceeds a certain threshold. And this would trigger certain things like more disclosures, explaining to a consumer that you're paying a lot for this loan, potentially. Now, there's grounds to be able to originate Section 32 loans under certain conditions. What about a rural community where it's under $25,000 and, a lender to do that loan? I don't mean it like with disrespect. If you need to borrow $25,000, if you call up 10 lenders, a lot of lenders don't want to make $25,000 loans. The reason why is the amount of paperwork and the amount of liability legislation and everything else that you have to do in compliance is equivalent to a $2.5 million loan, sans, the two appraisals. So the reality is that an originator would much rather do a bigger loan. They don't want to tell you, they'd rather hang up on you if you're asking for 25 grand. And to do that, to service that consumer in the United States, that we say, listen, lender, if you want to, you can charge them a little bit more. It's going to be a high cost loan. If it's high cost, we want to make sure that they understand that they are paying more for this under certain conditions. So Section 32 loans. Now, some lenders will never originate a Section 32 loan because they don't want to be considered predatory in nature. So they're scared of the P word, predatory lending. And so that's how that works. Now let's just go into this a little bit. The Homeownership and Equity Protection Act, or HOEPA, protects consumers from predatory lending practices. Just mentioned that word. A mortgage is classified as a high-cost loan. This is stuff you want to remember and memorize, where the APR of the loan exceeds the average prime offered rate by more than 6.5 on first liens or 8.5 on subordinate liens. So the APR of the loan, remember the APR is the true cost of credit. It's not the interest rate. I've discussed this before. I think we have a 25-question NMLS practice test on our YouTube channel that's doing fantastic, by the way, and thank you. And that actually, there's a question on there about APOR. So just look into that and you'll see that there. All right, so APR by more than 6.5% for first mortgages and 8.5%. So if you're thinking about that exceeding amount when you see that, well, that means that this is a pretty high cost loans, because remember, the APR reflects the cost of doing business with the lender. As a matter of fact, that's how two lenders are compared, not by their interest rates, by their APRs, because two lenders might offer the same interest rate, but their APRs could be vastly different. That's where you're looking, right? Okay. Where the points and fees exceed 5% of the loan amount for loans more than $26,968. I'd mentioned $25,000 earlier. It's exactly $26,968. This changes and adjusts. Prepayment penalties extend beyond 36 months or exceed 2% of the loan amount. Now, as an educator in this space, I know for a fact that a lot of publishing companies that publish this content, that books that you actually might be studying from right now, they highlight this one. All right, this one is what a lot of students memorize. Another one that they should be memorizing are these two. Now here, if points and fees exceed 5% of the loan amount for loans more than $26,968, then that is also considered a high-cost loan. And prepayment penalties extending beyond 36 months or exceed 2% of the loan amount. Now let's check out the answer. In that case, then we have letter D. Points and fees exceed 5% of the loan amount. So again, which loan is considered a high-cost loan under HOEPA? Answer here is letter D. All right, you're doing excellent. Let's keep going. Number 4, which of the following statements about mortgage advertising is true under the Truth in Lending Act, or TILA? Letter A, stating low monthly payments in an ad requires no additional disclosure. Is that true? Letter B, advertising an interest rate requires the lender to also disclose the APR. Is that true? Letter C, lenders can use bait and switch tactics as long as the new loan terms are similar to what was advertised. Is it true that you can use bait and switch advertising? And letter D here, trigger terms only apply to TV and radio ads. Is that true? So the question here, the truth of the matter, pun intended, is they're looking for, under the Truth in Lending Act, what regarding advertising is a true statement. They're looking for what's true. So the question, once I've determined that from the question, then I can go through and ask myself, is that true? Is that true? Is that true? Is that true? And then you can go through and start to figure out what's true and what's not. I'm going to say, okay, stating low monthly payments in an advertisement requires no additional disclosures. Well, I'm saying that that's not true. Not true, NT, or false. And again, this is funny, but when you talk to folks and they get confused about what's being asked in a question, are they looking for true statements or are they looking for false statements? Then simply writing in false could confuse somebody. If you're taking notes or trying to mark something, right? Could confuse you. So you might pick the wrong answer. So again, I'm using this intentionally. Not true versus false. They mean the same thing, right? Okay, but there's this subtlety psychologically that plays. Advertising and interest rates requires the lender to also disclose APR. So if you're advertising an interest rate, do you also have to disclose the APR? That is absolutely true. So we're looking for true. I'm going to say that's true, but I can't answer B yet unless I make sure and validate. Maybe I screwed something up in the analysis. Letter C, lenders can use bait and switch tactics. No, you can't. Never. By the way, as long as the new loan terms are similar, so this is not true. And then D, trigger terms only apply to TV and radio ads. Trigger terms are terms that require further disclosure in anything. So low monthly payments is a trigger term. It's a clustering of words that would prompt further clarification. Check out trigger terms. These are things you need to know for your exam, by the way. Trigger terms only apply to TV and radio ads. No, that's not true. All right. So my guess is letter B. Let's go here. All right. Under TILA's Regulation Z, mortgage advertisements must include accurate and non-deceptive information. So we got that part. The key rules include trigger terms are required disclosures. If an ad mentions a specific loan term, it must also disclose related details to monthly payments. If monthly payments are disclosed, we must disclose the APR, repayment terms, and loan conditions. If down payment amounts are mentioned, then we must disclose required terms for obtaining that down payment. If the interest rate is mentioned, then we must disclose the APR. Now, here's something that I'm pretty sure you might see. You're pretty sure you might see. If the APR is being advertised by itself, that requires no further information. My friends know that. As a matter of fact, there's a question about that in my 25 questions on the NMLS practice exam that we do on our YouTube channel. All right, so that's sort of the key rules and triggering terms regarding this question. Let's take a look at the answer. Oh, excuse me. Let me finish up just one more slide here. Sorry about that. Bait and switch is prohibited. Lenders cannot advertise an attractive loan to lure customers in, only to switch them into a less favorable product, even if the new terms are similar. So bait and switch is never okay, ever. And that's on your exam, I would theorize. Trigger terms apply to all media, not just like TV and stuff, not just TV and radio. These rules apply to print, online, and social media ads too. Okay, so let's take a look at that question again. Bingo, bango, and here you go. Which of the following statements about mortgage advertising is true under the Truth in Lending Act? And letter B is a true statement. Advertising an interest rate requires the lender to disclose the APR. Another thing that's true is if we were just advertising the APR, then that is okay to stand alone. All right. So we just went through a few questions. And again, it's not the quantity of questions. It's another thing that when I speak with my students, and this isn't something that I've been speaking to for a long time. It's not about the quantity. I swear to you, it's not. Trust me. Just you have to believe that. If you don't want to believe it, then and you adamantly feel that it is about the number of questions that you practice, well then that's good. That's your opinion. Mine is supported by thousands and thousands and thousands and thousands of test cases of different minds, of different people, different properties, different impressions, different backgrounds, different understanding. All adults have already grown up and have their own social beliefs and confirmation biases and everything else. So I'm supporting it with that sort of objective understanding of the data. Some of that is subjective as well, but it's not about the number of questions. It's about the power of analysis. It's about understanding what's happening in the questions. So I hope, even though we didn't go through a lot of questions today, that what we did go through is going to be helpful for you to understand something a little bit better when you're looking at these questions. Maybe the analysis side of it, maybe reading the answers first, maybe going about it and trying to validate, or maybe making sure grammatically you understand what the question is just simply asking you. Maybe go through a practice exam and just read the questions. I advise it all the time. Now, I give the blessing of being able to teach high-level executives. Many times I'm called in. I'm like the wolf in Pulp Fiction, and I get called in to do some kind of a task where I need to go into a large corporation and I need to educate a top-level executive. It could be upper management. It could be even C-level. And I'm there to help make them learn something, and they haven't sat in a classroom in like 30 or 40 years, and my job is to help them, knock the ring rust off and get them to be able to pass an examination in the most efficient time possible. And I can certainly tell you one of the most interesting things that I've learned, a tip, is that sometimes it's as simple as just reading comprehension and watching out for what is being asked and making sure you're clear. All right. So with that being said, thank you all once again. For those of that are subscribed to our channel, thank you. My goodness, very much. We're growing like crazy. We are so thrilled. We talk about it constantly. We are so privileged to be able to spend some time with you. I wish I could just meet you guys in a room and hang out and we can talk and we can share stories. It would be fantastic. I used to do that. These days, it's just we're meeting digitally and that's how it goes. But I sort of digress. I'm very thankful about this opportunity, and it's so cool to see so many people pass. If you have any questions, please leave them in the comments. We're happy to check them out. We get back with answers. We try to respond to everybody. If there's some specific things that you're looking for, a little bit of clarity, if you give us a suggestion, we have a growing suggestion box, and we're trying to figure out, we go through the list and try to figure out what's relevant, when we can teach it, and everything else. We are soon to be dropping a primo product. It's going to be for sale, but what this thing is phenomenal for the real estate folks, and we're developing one for the mortgage folks as well. It is the concise essentials of what you need, eliminating all of the drag. Very, very well crafted test questions and a humongous relief of reduction of hours of focus on what you need to do. We're also about to launch an entire community where you have access to all of this information, advertisement free, in a place where I'm going to be available. I'll be going live on a regular basis, working with students in sort of this tutoring environment, and it's going to be phenomenal. If you're interested in something like that, drop a message in the comments. Let us know. We'll figure out a way that you can DM us an email address. You can even download one of our free exams or our flashcards if you want to, and there you will capture your email address. But we'd love to know if you're interested in something like that, then we can shoot you an email when something like that is available to see if it's something that suits your needs beyond what we're doing here on YouTube. Anyway, it was a pleasure to be with you for one more exam breakdown. Have a fantastic weekend. Study hard, study well. I hope the time that we spent together today will yield you some success. Good luck on your studies and good luck on your tests. I will see you guys on Monday. Have a spectacular weekend and a fun St. Patrick's Day. I'm going to eat some corned beef and cabbage. Looking forward to it. It's one of my favorite meals. I don't know why, but it's just good. And we'll see you. All right. So good luck with your studies. We'll see you next week.